¿Hablas español?
Sprichst du Deutsch?
Kan du norsk?
If you used Babbel, you would. Babbel's conversation-based techniques teaches you useful words and phrases to get you speaking quickly about the things you actually talk about in the real world, with lessons handcrafted by over 200 language experts and voiced by real native speakers. Babbel is like having a private tutor in your pocket. Start speaking with Babbel today. Get up to 55% off your Babbel subscription right now at babbel.com/Spotify. Spelled BABBEL.com/Spotify. Rules and restrictions may apply.
Reality radio for a really great future. We're talking real money.
Welcome to the show and the podcast. It's a show first on Northwest News Radio. Talking Real Money is the name of it. And then it becomes a podcast next week. And you are invited to call us and discuss financial stuff that is part of your life that makes you a little crazy at 855-935-TALK. That's 855-935-8255. I'm Don McDonald, along with Tom Cock, and you will lose a lot of my attention in 30 minutes.
That's a given because the Great Pumpkin is going to be watching the Broncos. So
I got my number 13 jersey on.
Orange jersey on there, ready to go.
I'm wearing it. I have in the closet. I have a John Elway signed helmet. I'm going to bring
which we wish all Bronco fans were in. By the way,
the closet.
Yeah, of course.
Yeah. Well,
sure. Yeah.
Actually, the AFC West fans who should probably spend more time in the closet than any others support a team out of Vegas. I don't even want to.
By the way, did you watch the Elway piece? No,
I have not watched it yet.
I enjoyed it. I liked it.
Still finishing up the Jumping the Shark seasons of Mad Men.
Yeah, it gets a little weird at the end.
Shark jumping going on here.
How long we going here?
I don't think I watched the last season and a half because
I don't think I did either.
Because I
rewatched it.
Really?
I don't remember the end. Yeah, the end is.
I don't know. I don't remember the end. But right now I'm going. Really,
it's
Debbie and I both.
Sopranos.
We were like,
what?
What?
Yeah, I think that's It's not as good at the end as it was at the beginning.
It's different and it's unsettling. I think is that.
It's probably true. Yeah,
it's unsettling.
More self-destructive. It was kind of amusing at the first, and then this is bad.
Anyway, welcome to Talking Real Money. I'm Don. That's Tom, and we're here to try to help you have a better future. And one of the parts of your future that we really concentrate on, that's why we do things like Retire Meet. We concentrate on what is going to be the biggest single expense of your entire life, and that is whenever you start it, retirement. You save.
I was thinking my first marriage there for a moment, but go ahead.
Well, for some, maybe, yes. But no, when you look at the numbers.
I'm sorry.
Retirement's probably even more expensive than that, which, as bad as it was,
close.
It's pretty bad. You have to be saving for it, and many of us save through our private plans at work, 401ks, 403bs, those kinds of things. But there are some alternatives occurring out there, and I really wasn't aware of them until I saw this CNBC articles. So I guess
there's of course this is something that comes up if you don't have an employer sponsored plan. It's about half of the country that has one.
Yeah.
It's a smaller number than you think. And by the way, the number of people using those keeps going up. That's great. Love that. And I like the plans where you
a lot of really small businesses have no retirement plan that they offer to their
can't
employees.
afford them.
Right.
There's a whole bunch of reasons there. And so there are these state-run retirement accounts. Washington's getting its own next year, 2027, the Washington Saves program. I looked it up. I know one guy who's on the board, so that's good. I'm not, so that's probably good too. It's kind of it's a way that smaller business can offer this to employees, and it doesn't cost the business anything. So this is where it gets tricky. Like, okay, who's paying that? Because somebody's paying.
Taxpayers are paying?
I doubt it. My guess is the participants are paying the investment management company something for the pleasure of doing all this.
Okay, that's what I come down to is that, wait. If you want, as an individual, and you don't have a retirement plan at work, you can fund a Roth or a regular IRA.
This is there's no question. But the article makes a very good point about that the people that need to do that on their own, very few of them do it. If you have an employer plan, your participation goes up. I'm trying to find the number here.
Is it opt?
15 times more likely are people to save if they do so through an employer.
Is it an opt-out program? So they're automatically opted in.
Correct.
You got to.
Some are opting out.
So it's a negative option.
Yeah, exactly. There's already 18 states that have this. As I said, Washington is going to start it next year. Yes, you're correct. You can do a Roth IRA. You can do an IRA. You could do, there's a whole bunch of things you can do. But will you? Harder.
So what they're saying is that these accounts are going to help because it's forced savings.
Basically,
okay.
Yeah. Which
that makes sense.
We know, again.
We do know that works. I mean,
15 times.
That's
way
why.
More
that's
likely.
why we're not required every paycheck to send a check to the IRS. Nobody would do it.
No. And some people don't do it even though they have to. That's a whole other equation. You know, I messed up my payroll. I already told you that. I paid them nothing. Something.
Yeah, now you're going to have to pay a little extra.
Well, I know. Yeah. That's not going to be fun. But on the face of it, yes, this is good because increasing the number of people who are saving in a disciplined, regular method, great. Mm-hmm. I don't know the specifics of the Washington Saves, how much it's going to cost, what the options are going to be for investing, that kind of thing. And I like the fact that it's all Roth because this is something I have talked about for over a decade. I think all retirement savings should just be Roth, period. Pay the tax, put the money in. No rules about when you have to take it out. No taxes when you take it out. It grows tax-free. Has every advantage. By the way, the advantage to the government is they get their money right now. They don't have to wait 40 years for it.
Well, I looked up the OregonSaves account, which is close to you guys. And the fee is 0.5%. 50
to the employee.
Points. To the employee.
Right, not the employer.
Correct. And I don't know what kind of investments they have, but I am going to look those up. I believe they're target dates, if I remember correctly, but let me do a little check-in on that, and then we'll return. 855-935-TALK is our phone number. We've got lines open for you. Call us now.
Tom and Don are talking real money.
AI is incredible. It can teach you how to fry an egg and even write a poem, pirate style. Yarr! But it knows nothing about your work. Slackbot is different. It doesn't just know the facts. It knows your schedule. It can turn a brainstorm into a brief. And it doesn't need to be taught. Because Slackbot isn't just another AI. It's AI that knows your work as well as you do. Visit slack.com/meet Slackbot to learn more.
Your guides to a really great financial future. Tom and Don are talking real money.
Well, during the break, I did a little more research on the OregonSaves plan, and their investment choices are the State Street Target Retirement Funds.
All of them. That's everything.
Yeah, or a capital preservation fund. Totally
and
safe.
So again, the capital preservation would just be a very, very, very short term bond,
yep,
right?
Yep,
and the others would be balanced between stocks and bonds, depending on when you're retiring.
That's right. So 2025, 2030, right. et cetera. They have a expense ratio of about 20 basis points, which is
in addition to the 50.
In addition to the 50.
Okay, so all in you're paying 0.7. That's not bad.
Yeah, it's not terrible.
No, that's not terrible.
The thing that I'm not a big. I'd never really looked at it before, but the investment choices at State Street are a little funky. The bulk of the money is in the S&P 500 fund.
But the bulk of the money in every 401k plan.
Yeah, but it's so funny. They have very little other. In that,
you don't look at these every day. Yeah, I do, right. And most people don't have very many options.
Yeah, the Vanguard is all the Vanguard total stock market, basically. Yeah, you're right. They have a little small and mid, but it's not much.
Not much. And international, maybe you get developed. You rarely get emerging markets. You rarely get small in value in those, which have been pretty important.
I saw any. Did I see any emerging? No, but they do have a commodity fund.
Oh, of course.
At State Street.
And don't worry, they're going to have a private equity fund coming soon, I'm sure. No, I'm being facetious. I hope it's not.
They have a real estate fund.
A REIT?
Yeah, they have a REIT fund in there. The Spider REIT fund. Anyway, so I guess that's going to be an option for some, but what'd you say, 17, 18 states?
18 states, more adding all the time. Washington coming in 2027. So
I'm pretty confident Florida doesn't have one. I'm pretty confident.
They will sometime when we roll over from 2100 to 2200, maybe. So
in the next century. Yeah,
I'm just saying.
Maybe. I doubt it.
A little behind the eight ball, other than amusement parks they're ahead, but other than that, not so much. So.
No, I'm looking. We don't have one. No,
I didn't think so.
No. You're on your own. You live in Florida. You're expected to kill what you eat.
And save some of it for the future, apparently. In the garage, maybe hanging there if it's cold enough, right?
855-935-TALK is our phone number. We've got a line open for you, so give us a call right now, 855-935-8255. In addition to talking about getting to retirement and how you can do that through these funds, the other thing we wanted to discuss this hour is an article that we just read in the Journal.
Wall Street Journal. Major publication.
Interesting. These have come up. I've seen 2 or 3 of these lately. And this is something that's going to come up at Retire Meet, too. We're going to talk about this, is not just having the money you need to retire comfortably, but really rethinking what retirement is, what it's about. As a matter of fact, one of my commercials, I kind of poke fun at that, a commercial for Retire Me, where I go, what are you going to do in retirement? You're going to golf for like 3 weeks?
That wouldn't last 3 days, by the way.
Me neither. And because I'm so embarrassed at all the balls I lose.
Exactly, yeah. Or, hey, maybe you and I could take it up together and then we wouldn't bother anybody else. So.
No, the problem is there are other people on the course. We just need our own course.
See, I'll hit whatever.
Because you know those guys who are coming up behind you?
Oh, yeah.
Here's what I do. When I'm on the golf course, I'm going, come on, play through. Play through. Just
so you've been saying play through to every foursome for the last 3 hours.
About 8:30 as the sun is setting in the summer, I'm going, I'm still on the 3rd hole.
Yeah, it's
I'm a terrible, terrible, terrible golfer.
What you're talking about is kind of purpose, meaning.
I was going to get to that. There has been a lot of research done that shows that all people, before they retire or after, need a feeling of purpose. Most people who have a job, though, have that feeling of purpose. Mm-hmm. It's when you retire that suddenly, for many, the purpose goes away. And this may need to be part of the whole retirement planning process. What are you going to do with those? Like, you retire at 65, you probably have 2 decades ahead of you.
On average, you've got about 14 years. I think it's 79 for men.
Yeah, but if you make it to 65, no. But if
then you got longer.
You've
That's
got
true.
greater longevity. The average age is going to be about 85 for if you make it to 65. You see, the average life expectancy
your word
for
men,
that.
That sounds high.
I'm going to check the number to make sure.
I'm sure you are. But what you're talking about, and what the article does a nice job of framing, is, in their words, mattering. And this is something, by the way, a friend of mine, dear friend who's very sick right now, and I want to send out my best wishes for recovery, Rich Buck, has mentioned to me many times in retirement, and he's done a great job in his retirement, is mattering to somebody else. In other words, somebody else is reliant on you in retirement. I ran into a very famous professional soccer coach a few years ago at dinner. And I said, how's retirement going? He's awesome. I said, what are you doing? He said, I drive my grandsons to school every day. I thought,
you already do.
These guys are a premier soccer coach. He's like, it's very important. This is what I do, is a function, and somebody else is relying on me. I absolutely love that. So I can see by the smile on your face that, once again, you were right about the numbers.
Yeah, if a male gets to 65, he can expect to live on average to 84.
That's troubling, so that means I've got many years ahead of me.
You do. You have a couple of years left. You have a 25% chance of living past 90.
Let's not go there. What do you say?
So this is all the more reason to have a purpose. You got a lot.
But let's talk about that.
You may have a lot of life ahead of you.
That's true. But let's talk. Well, after the break, we'll talk more about this, because I've seen it both ways, and it can work either way. But we'll take this up in a moment.
What both ways?
Whether you have a plan, a purpose, all that, or not. Yeah, we can talk about that.
I want to talk about that. That was the whole idea of bringing it up. 855-935-TALK if you want to talk about that or anything else.
Tom and Don are talking real money.
All these patients complaining they can't get their medicines. Insurers and PBMs are often owned by the same giant company, so middlemen, like me, decide what medicines you can get and how much you pay. But don't worry, if your prescription gets denied, we know another one that works for us. I mean, you.
Washington should stop PBMs and insurers from driving up drug costs. Learn more at phrma.org/insurer costs. Paid for by Pharma.
For your real life and real future, Tom and Don are talking real money.
Hello again and welcome back to the program. Tom and I are spending a little time with you talking about, well, your future, your retirement, and whether or not you're going to have something that makes you feel like getting up in the morning once you don't have to get up for work.
Yeah, and I've seen this many times, of course, because I get to talk to so many people who are getting close to retirement, in retirement, or retired, etc. I saw it done poorly with my dad. He hated retirement. It was not him. He was not engaged. They made him, by the way, leave the Air Force at 65. He probably would have kept working because he liked his job, enjoyed it.
And he loved his job, I think.
Retirement did not agree with him. He went to China and he went to Africa, did a lot of trips, but he wasn't himself. Now, recently, and so I used to tell people, I used to lecture people like, you've got to have a purpose. You got to know what you're going to do, etc. But I've run into many people lately, by the way, friends of mine, a lot of whom are now retiring or retired, who did not, who would argue with me. Nah, I do a little bit of this. I do a little of that. I like my life. The days fill up. Here's how it happens. I do a little bit of fitness and I do this and I do that. And I don't have to have a roadmap, a plan necessarily.
Well, but the thing is nothing is absolute. But a lot of people really do, as your father did, need something and don't think about that as part of their retirement planning. They need something. We know
one guy.
I know one
speak
personally.
At retirement, pardon me, Paul Merriman.
Yeah, and me. I would go nuts.
I do too. Sundays are not my favorite day. Oh. I have to be reffing or have another activity because I got to get out and do something. But Paul is, 82.
Oh, well, then he's just 2 years away from the average. He's almost out of here.
He's almost out.
And he's going,
for many people,
thanks, Don.
They need, yeah, exactly. And he will too, by the way. I would at least consider these things before I retire. We know, and I didn't get to the numbers here. From healthcare, the journal Healthcare, they interviewed a lot of people in retirement. They found a third experienced depressive symptoms, higher rates, pushed by being those who got pushed into retirement by illness, layoffs, or mandatory exits. I also do know that men in their 70s have the highest suicide rate in the country.
Well, that's
highest
depressing.
In the country, because you used to be important for some XYZ reason, and now you're not so much anymore. So I think that's something to pay attention to. I'll put it that way.
855-935-TALK is our phone number. We still have a lot of time. Well, Tom has some. The kickoff's soon in Denver. Let's go to Seattle. John, welcome to Talking Real Money. Oh, John dropped. Darn it. All right. Well, let's see. What's the time? Oh, yeah, time. Let's go to North Carolina. Wes, welcome to the show.
Hey, guys. How are y'all doing today?
Good, sir. Thank you. What's up?
I have my wife in the car, so we have a question. I know the answer, but I want her to hear it from y'all. We went to see a so-called fiduciary financial advisor today. And he was throwing a good pitch, and he said, I think y'all need some guaranteed money, and I think this index annuity for about $700,000 would be good for y'all.
Okay, well, let me tell you,
don't drive off the road.
He's in your case, he just violated every fiduciary principle known to mankind. He immediately went from pretending to be a fiduciary to being a huckster.
Absolutely.
You can't sell stuff and be a fiduciary. There's an interest there in selling you a product that makes you a non-fiduciary.
By the way, did he give you the name of the annuity? Oh, please tell me he did so I can look it up.
Oh, it was a nationwide annuity. It was an index annuity.
Yeah.
No, I don't have the name.
That's okay.
Because I wanted to look up what to look up what the commission was.
What was the pitch? Why do you need this?
Oh, I wanted to retire early, and so he wanted to give me about $50,000 of guaranteed income before we started taking Social Security.
And And what did he say the
because,
return from this annuity might be?
It's been averaging about 6.98%.
That, my friend, by the way, because we've run the numbers on this stuff, we've looked at the average on these index annuities is somewhere in the 3 to 4% range. When you look, I mean, so anybody who's saying 7, I've never seen 7, but
no,
wow,
yeah.
Crazy.
Yeah, it's all a game, and they just really they're not, once they go into commission sales, the fiduciary drops away, and the commission's probably with Nationwide probably between 6 and 8% of the premium, the upfront commission paid to the advisor.
Tom and Don are talking real money. Reality radio for a really great future. We're talking real money.
Welcome back to Talking Real Money. You know, if you'd like to be part of the program, it is so easy. All you got to do is call 855-935-TALK. That's 855-935-8255. We're spending a little time talking about purpose in retirement. The part of the world, frankly, that financial advisors until maybe 15 years ago didn't talk about at all. This was not a topic. We talk about income. We talk about investments. We talk about insurance. We talk about estate, all that other stuff. And then slowly we saw these problems emerging from people who had retired unhappily, from people who got into retirement and found out, wait, this extended vacation is not really what I was hoping for, and I'm not happy with it.
That's what I want. I want a
engaged.
2-year extended or a 10-year extended vacation. Yeah, no, I don't.
As you know, I'm on vacation all the time anyway. So, So anyway, these are things, I guess, at the end of the day, you got to know yourself. I think that part 2 is you should at least give this considerable thought before you retire. Kind of figure out what's going to, as I said, fill up the days, and probably talk to others. I talk to a lot of people about this. I've talked to a lot of my friends and colleagues about it. So again, I'm just saying, you and I agree on this. It scares me personally because I know I need engagement. My wife, she just thinks it's going to be nuts. So we'll see.
See, I don't need engagement. I just need creative outlets. I need to create.
You just need to.
I thank God for my short story podcast. That's all I can say.
Exactly. You have something else.
I have several of them.
I've got my
now.
model airplanes and my grandsons, I guess. That's about it. So
855-935-TALK is our phone number. There was an injury on the very first play in the game. 2 players injured. Head-to-head. Boom. Yeah.
Hate seeing that.
Yeah. So let's go to Georgia, shall we? Jeffrey, welcome to the program.
Gentlemen, good afternoon. Thank you for taking my question.
Our pleasure.
I'm sorry I don't have a question. I'm sorry I don't have a question related to today's topic of purpose and retirement.
Oh, that's okay.
If you could help me with some I was wondering if you could help me with some advice. I'm having trouble trying to help my mom out with a recent financial situation she's in.
Go ahead. Yeah, we want to do that. We'll help with anything.
Thank you so much. My mom's recently widowed. My mom's recently widowed and has Social Security and a pension that I think covers most of her expenses. And she also has a life insurance benefit policy that's from the passing of my dad. And I'm just trying to, well, of course, like the bank's trying to set my mom up with like a financial planner, and I'm telling her don't do that. But I'm trying to explain to my mom like the concept of total return and, just interest rate risk. She wants to put everything into CDs, and I just don't think that's going to serve her for like 10, 15, 20 years down the road.
Well, it's a great question, but if, as you said, Jeffrey, at the beginning there, if Social Security and pension is covering her costs, why wouldn't it?
Why wouldn't it what?
Why wouldn't CDs cover her additional expenses if indeed most of her income needs are met through fixed income like Social Security and a pension?
Well, I guess I've never thought about it like that. So you're saying that, possibly CDs or maybe, I would pick Treasuries.
Here's the way we look at it. We look at every person individually and every situation individually. And one of the things about taking risk is you take how much risk you can stand, but you don't take more than you need.
I'll put it another way.
I'll put
it another way. And here's the other part. I don't, and this is going to got to listen all the way through. I don't try to turn Republicans into Democrats or Democrats into Republicans. If your mom says, look, I don't like the risk of seeing the value of my portfolio, the value of my holdings go up and down, I'm going to say a nice CD ladder is a great idea. Now, here's what you might do.
Don't go to the bank.
Don't go. The bank's the worst place.
Don't go to the bank.
Selling you stuff you don't need.
Yeah, that's what they're trying to do. Yeah,
of course they are. But here's what you might do is for the majority of the money, maybe it is set up in, a CD ladder, short-term bond, something like that. That's giving her a little bit of interest, a little bit of income there, but it's very secure. Some of the money you could suggest is for the longer haul, not necessarily even for her, but maybe for the next generation, not necessarily you or others in your family, something like that. That is invested in equities to give it some growth. But the majority, and I'll give you an example. So my mom at her death at age 85 was in a portfolio of 30% in bonds, 30% in stocks, 70% in bonds. Very moderate, some growth, but primarily sort of fixed in terms of the, fixed, but less volatility. Not designed to make a whole lot of money, but some. So it fit her well. She went through 2008, et cetera. So you might consider something like that. But again, I would want to know what the objectives of the money, what sort of income she really needs from it, and know her, as Don correctly points out.
And never go to the bank to buy CDs. A couple of reasons. One, you're not going to get the best rates.
Go ahead.
Two, they're going to push you to talk to the broker in the bank because they make more money selling you commissioned products than they do selling you CDs. You go to a Vanguard or a Fidelity or a Schwab or whomever, and you create a portfolio of CDs, a laddered portfolio of CDs, so there's never any guesswork about maturities, or you're always getting a reasonably good rate, no matter what direction rates go.
Yeah, I was thinking because you were talking about, doesn't Fidelity, you were saying, don't they have some kind of automatic laddering function on their website?
Yeah, I know Schwab does, and I think Fidelity does.
Oh, yeah, Fidelity does, yeah.
Of course. Schwab?
Yeah, Schwab, too, if she does.
Okay,
if she's
cool.
not done
I'll
this.
look that up.
I would do something like that. I think it's a great way to handle it, yeah.
Oh, that's awesome, yeah, and thanks for your advice, too, Tom, because I was thinking the same thing. I was thinking maybe just 10 or 20% in, total market kind of ETF.
Something like that.
Just put it on a show me contract kind of thing. That'd be so easy to rebalance it if it ever dips,
Yeah, I think something like that makes sense.
Oh, that's awesome.
Yep.
Oh, that makes me feel a little bit better. Okay, cool. Yeah, that's a good way to look at it because, if everything's covered, we could look at this as like icing on the cake.
Absolutely. Jeffrey, thanks so much for being a part of the program. We've got a line open if you want to join us, too, at 855-935-TALK, 855-935-8255. You need to call to keep Tom company because I'm paying attention to the game.
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
Hey, we still got time to fit in your call at 855-935-8255, 855-935-8255. And since we're talking about football today, there's
fourth and
a couple
inches.
Of games today. Fourth and inches.
Oh, first down. Okay.
Broncos got a first down. Good for them. And tonight will be the big Seahawk game at Lumen Field. Tomorrow, a couple of games. Paul sent us a question in. This is a pretty important question.
Come on, you're not.
I know you didn't want to do it, but I love it. I thank you.
Paul sent it to you?
Yeah,
okay.
Paul sent it in. He's a regular listener. Good guy.
All right.
He says, here's the question. I was recently let go from my job in, and listen carefully, Las Vegas. I was wondering if I should transfer
Was he working at a casino or something?
I don't know. I was wondering if I should transfer my 401k to Vanguard or let it ride for now. I'm 74 and don't know if I'll be rehired anytime soon. Pete is the writer of the message.
Oh, sorry.
It's really hard to follow all this when you're doing that.
I'm sorry.
Okay.
Well, there was a fumble.
Did you lose the ball?
I don't know yet.
Okay. This is a joke because Pete Carroll was recently let go from his job, as you may know, in Las Vegas. And his 401k, I think, is going to be inconsequential to his financial situation because I believe I read he got something like $30 million buyout or some ridiculously large amount of money. So
his 1 year 401k with the Raiders is got what, 10 grand in it?
36,000. No.
Yeah, okay. He did the max. So he 36.
I'm sure he maxed it. Yeah. So, and yes, Pete, you should move it into your IRA. Have one pre-tax account, one post-tax account, and one brokerage account. You got the ball back, I can see.
Penalty.
Oh, prior to the fumble.
Uh-huh.
Okay. Saved by the zebras.
Sorry. I told you I'd be watching the game.
I know. So, and doing it the way I just said it, and thank you, Paul, for sending that in. I appreciate it.
It was a joke. That was a joke. I get it. Uh-huh.
Yeah, it's funny. Here's the thing, though.
I think Pete will be fine.
Yeah, financially.
Yeah.
I do worry about his purpose in retirement. He's a guy that is engaged, and at 74, he still has a lot of energy, I think. I'm sorry, the last one didn't work out because I wanted it to. But here's you don't want to leave these 401ks behind. You end up with a thing called hodgepodgeitis. This account here, that account there. They're hard to keep track of. You don't know how they're invested. If you have to rebalance it, you generally don't do it. And as you get closer to retirement, you have all these accounts. You got to figure things out. Cleaning it up, I think rolling old 401ks into a new one as you go makes the most sense.
If
the
you
plan
have
is
great
decent.
choices, and that's the
Not
problem.
great, but good.
A lot of plans have terrible choices. We've seen so many bad ones. And when you have your own IRA, you can do almost anything.
Yep. True.
Which is an advantage.
Exactly. So, so the short answer is most of the time you're going to want to move that into your new plan, reinvest it, not leave it behind. But great question. So, we have any callers?
No. You just have
what
me.
happened
I'm sorry.
now? You're despondent now.
I just the ball was right there. It was right into his hands, and he dropped it.
Oh, okay.
In the end zone.
Didn't catch the ball.
Nobody
Nobody cares about your game. They care about the game 3 hours from now.
I know you don't care in Seattle, but I care here in Florida.
All right, then I'm going to read a question. Is that okay?
Okay, let's see. Yeah, you have time. Read a question.
Okay, Don writes us from Columbus, Georgia. We go twice to Georgia here this hour. I found your podcast 1.5 years ago. You gave me knowledge and confidence mixed in with some humor to leave a brokerage firm and self-manage my taxable 401k and wife's SEP plans with primarily low-cost ETFs. We have a sizable portfolio resulting in the elimination of $100,000 in annual fees. Must have been paying somebody a whole lot of money.
What?
He says, assuming I live another 20 years, this amounts to $4 million in compounded savings.
Wow.
My question, with the information you provide, are you concerned that more in my situation will self-manage, and do you see more percentage-based financial advisors going extinct? Will more hourly-based advisors be in the future? Appreciate your comments, and you guys rock. It's a good question.
It's a great question, and here's part of the problem, is when you look at that fee from a AUM-based fee-only advisor,
percentage of the portfolio.
It looks ridiculous.
Mm-hmm.
But what people don't understand and shouldn't understand is the incredible costs of running a registered investment advisory firm with the amount of regulation that exists.
But I'm just the client. I don't care how much
but
all
the fact
that
is,
stuff costs.
going to hourly, though, that you would have to charge so much. And you see it. You see these firms, they're charging $500, $750 an hour. And remember,
I'm not so worried about it from that perspective. Here's the perspective I'm worried about it from. The hourly structure, if you will, which is, I don't know how much more popular it was than 10 years ago, because it seems to come up. There's some bigger names that recommend it.
Yeah.
And they kind of go away. If you're close to retirement or in retirement, most people are going to, it'll be better for them to have somebody managing the money, creating the best tax efficient withdrawals, looking at your taxes, doing all that part of the portfolio design rather than doing it on your own. For most. Not everybody, but for most.
And that's borne out by Vanguard's Advisor Alpha study.
Right. As you're growing the portfolio, if you're 40 years old and you got a 401k and you got a Roth IRA, et cetera, yeah, I think you can do that on your own. We give you funds for that kind of thing. Sometimes we add in new funds, make it a little more confusing. We've got more questions about AVGV now too. Thanks a lot, Don.
Well, it's interesting. I've looked at, in fact, Rick Ferry used to say anybody who's charging more than 0.4% is ripping you off. But the reality was Rick had a huge minimum, and I don't remember exactly. I think it was $20,000 a year.
Yeah.
So with a small account, that was a really high percentage. Yeah. So it was, and I've talked to some of the people who charge hourly, and you end up paying a lot. You still end up, because there's a lot of behind-the-scenes hours.
I worry also
that
that if you pay hourly, that somebody's not there to help you at the moment you may need the help. That's the part I worry about.
I don't worry about that, but hang on with us just a minute, because there's something else I want to cover in this.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
There are a number of ways that advisors charge, and the old way was commissions, and we found that to be really expensive.
Conflicts.
So we got into AUM-based fees, and people went, well, that's expensive.
Yep.
There's a cost to all of this, and the marketplace kind of sets the costs and the level of services and what your expectations should be. But it's all over the place, and you can't have a lot of service and little or no cost. I looked recently at a firm that charges a monthly fee for...
Depending on the size of the account?
No,
or just
monthly,
that's it.
Flat fee. They charge you $699 the first month to set up the account, and then it's $199 a month after that, and you have access to an advisor anytime you want to talk with them.
Anytime?
Anytime.
That's fascinating. Wow.
Anytime. But here's the rub. They do not manage your assets like an appellate does.
They just tell you, go buy these funds.
And it's only 3 funds. It's a 3-fund
portfolio. By the way, when you sent that to me, I couldn't find the funds. What are the 3 funds?
They didn't. No, they didn't. I don't know.
Oh, they won't tell you. That's proprietary.
I don't know. That's proprietary.
Okay.
They're keeping the 3 funds a secret. But they give you 3 funds, and that's it. So you're getting a very limited amount of advice and counsel, and you're not getting the broad planning advice either, really. Planning
and tax planning, because in retirement, the tax thing is bigger than you may think. Again, and it sounds like I'm defending the industry. I'm not.
No, it's just...
I'm simply saying what I see.
I think the marketplace sets prices relatively fairly.
We'll see about
when
that,
there's
right?
transparency.
I mean, he may be right.
When there's transparency. When everything has to be disclosed.
Sure, it may change. There may be in the future where he's right, where there are more hourly people, there are more set price people, there are more people that are doing this on their own. The reason I don't see that is because most people struggle to understand investing. They really don't do a lot of financial planning per se on their own. And many people who have saved something don't want to. They don't want to spend the time on it. So, yeah, we run into people the opposite. Some of whom are clients, by the way, that love spending time on this. They love talking about it. They review it. They do all that, which is great. Love to have people engaged. There's a lot of other people, frankly, that just push the chips, if you will, across the table and say, take care of them. Make sure you don't, blow it.
Well, and I find the low cost things kind of fit in with what we talk about is when you're in the accumulation phase of life. You don't need as much of the in-depth counseling and tax planning services and estate planning and all of those things that you need when you get older and you've really accumulated assets. There's a big difference.
And that's another thing. You mentioned another thing. As we get older, I mean, I'm glad to have somebody looking over my shoulder. And when something takes care of me that I can't deal with it, I'm glad somebody's going to be there and somebody will take care of Danielle. I'm happy for all of that. Now, I don't have to pay for it today. I may have to one day, but not yet. So
yeah, someday you probably will. Yeah. But, you may cut a deal before you leave. Thanks so much for being a part of the program. If you have questions, go to talkingrealmoney.com and send them in on the contact form. That's talkingrealmoney.com. And if you want to meet with one of our fiduciary advisors, we will let you talk with them for free for a while. Just go to talkingrealmoney.com and then look for the button that says Meet an Advisor. You click on that, you fill out a form, you make an appointment. You could even meet with, some guy named Tom if you want to.
Happy to.
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor. Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services. Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. And the lawyers get richer.